Sourcing deals for direct investments. In this video, we will look at sourcing deals, or finding interesting, quality companies in which you can invest. In particular, how can you get early looks at companies before a lot of investors start negotiating with the company, potentially diminishing your negotiating leverage and increasing the price? Most larger investors, such as venture capital and private equity funds, have somebody on staff focus entirely on deal sourcing. In fact, the average number of employees that specialize on deal origination is 3.7 for VC firms and 6.9 for PE funds. That means that PE funds have an average of 7 full-time employees looking for deals, and many more employees who perform the analysis and negotiations. Most family offices don't have a large enough staff to devote to deal sourcing, so you have to look outside your office for deal sources. In another video, we discuss some overall direct investment strategies that you can implement to lower your risk and increase your returns. These strategies include vertical investing, horizontal investing, spray and pray, and follow a leader. Your strategy may dictate that you implement some techniques for finding deals and avoid others. But let's look at some popular ways to find deals that you may be able to use and to fill your family office's deal pipeline. Join an angel group or network. Join online networks. Affiliate with incubators, accelerators, or universities. Join relevant industry or trade groups, entrepreneur networks, or special associations. Network with local lawyers, accountants, consultants, and also with VC firms. Work with M&A advisors or business brokers. Create a website and let them find you. Angel groups. Over the past 15 years, an increasing number of private investors have joined or formed angel groups or networks. There are more than 300 angel groups in the United States alone, in communities across the country, and many more groups globally. These groups usually have websites that attract local entrepreneurs and someone, either on staff or as a volunteer, who proactively works in the community to promote the group and to find potential deals. In addition, most groups have a structured deal screening process to filter out companies that don't interest their membership. The biggest drawback to these groups is that they are groups. They form a personality based on the group, not necessarily your family office's preferences. The deals they attract and deals they screen fit the overall group's approach and biases. Thus, it is important to do research and to get a good feel for any group before you join. Join online networks like Gus.com, AngelList.com, and SecondMarket.com, etc. The biggest advantage to these online groups is the sheer number of deals you can find with a few clicks of a button. You can often search, filter, or sort based on your preferred criteria. Each website has its own slant or focus, so you can research before you join. The biggest disadvantage to these groups is also the sheer number of deals and lack of a consistent screening process before you see the deals. Because these are online networks that try to make it easy for thousands of companies to submit their information, there's an increased chance that some of the deals are not exactly what they claim to be. Further, they try to recruit as many investors as possible, which most likely will create more interest from other investors. For many sites, this is the goal. The good news is that this could allow you to place a lot of small investments alongside many other investors without needing to complete the round yourself. Another approach offers much more intimate access, but to a much smaller universe of deals. Incubators, accelerators, and many universities work with truly early-stage companies, or even just innovations that may evolve into companies. By affiliating with them, you could get first dibs or at least a sneak peek at any company that graduate from or emerge from the organization. If you can also participate in the program, perhaps as an advisor or even a speaker at events, you can build a positive reputation and start to build relationships with the entrepreneurs. This way, they may already trust and respect you, so they may prefer to work with you even if other investors offer more attractive terms. Likewise, you would know something about the entrepreneur and opportunity before being asked to invest. Join relevant industry or trade groups, entrepreneur networks, or specialized groups, such as associations for minority-owned, women-owned, family-owned, or veteran-owned companies, or even alumni networks from your team's alma maters. Getting involved with industry-specific groups will be particularly helpful if your strategy is to focus your investments within a vertical. You can keep up to date on latest trends or issues and network with entrepreneurs who may be looking for funding. In addition, you can network with representatives from larger companies that may one day acquire the companies in which you invest. Again, if you can take an active role in the group, even as a speaker at an event, you can build a positive reputation and awareness of your family office so people will approach you. Network, network, and network. Perhaps the best way to find quality deals that are not yet being shopped around is to personally network with professionals who advise companies looking for funding. Local attorneys work with all kinds of companies, and securities attorneys often are engaged as a first step in a company's fundraising process. The attorneys know about deals before they become deals. The other early insiders are accountants who know the true profitability and cash needs of their clients. Business consultants also often know of many potential deals because they may be the one advising their clients to seek investment capital to fund a new growth initiative. Collectively, these professionals can be a great source of fresh deals for you. If you get to know them individually, you can learn whom to trust and where their long-term interests lie. You also provide value to them because, with your involvement, clients get the funding that they need. VC firms. These may also be a great group of which to network. They receive hundreds of business plans every month in some cases, but only investigate a handful. They dismiss a vast majority of the potential deals, oftentimes because the opportunity is just too early or not likely to return $100 million or more to the firm. Yet these companies may be perfect for your investment strategy. The individual analysts or partners at the VC firms may be willing to either refer companies to you as a polite way to turn entrepreneurs down or forward you the business plans. For some, sharing with early-stage investors they trust and respect is a great way to nurture deals that may be promising for them later. Another group of professionals to know is business brokers. You can have informal relationships or engage with them to source deals for you. These may be the same M&A advisors you may turn to later to help exit your investments. Business brokers provide two valuable services for investors. First, they can make introductions to companies that may not have hit the roadshow and met with every possible investor in town. These companies may be under the radar for most investors for now. On the other hand, most quality business brokers working for the company won't give any investor the exclusive. They will do their research and find a number of investors who may compete. But, depending on the size of the deal, the investors could collaborate instead of compete. The other valuable service brokers can provide is the work that they perform with the company before they approach you. They know what investors expect and demand, so they can prepare the company ahead of time. Some will actually help the company improve its operations. Some will clean up the financial statements. At a minimum, they can make due diligence easier and faster for you by pulling together all of the common documents and materials into a single packet for you to review. However, also keep in mind that they are compensated when the deal is closed, so their incentive is to get the deal done, not to help you get the best deal, and they have no stake in what happens after you invest. Finally, you can take an even more proactive and personal approach. You can create a website and let companies find you. This could be part of your current family office website or a separate site targeted towards entrepreneurs. There are two key elements to include on the site. First, explain what you are looking for in companies. Do you have an industry focus? Do you prefer companies with a certain minimum or maximum revenue size? The more criteria you list, the better entrepreneurs can self-select and the more relevant the deal flow. Second, provide a way for companies to submit information to you. Should they email you an executive summary, a PowerPoint, full business plan? Do you prefer they fill out a form on your site or submit their information to a third-party site? You can also add a blog discussing investing topics or tips for entrepreneurs or links to any groups you are affiliated with. These help with search engine optimization, as well as further increase the self-filtering process. Whichever approaches you take to find and increase deal flow, one of the unique aspects of family offices you can leverage is a reputation of the families who you work for, and if you are able to reference their names. Of course, some clients will prefer to remain anonymous. Others may want to participate in the process or have their names associated with the investments. Ultimately, most angels would agree the goal is to have one or two sources that you can rely on for unique, quality deals, and one or two sources you can approach to invest alongside you in deals that you find. This video explained a number of ways to first learn about potential deals. This is really just the first step. The next step is to evaluate the company, the entrepreneur, and the deal. After that, you need to perform due diligence and then negotiate the terms of the deal and manage the investment to exit. We cover these topics in other videos.